Good morning. Welcome to the Saturday SMS. We don't have Arup and Arpit today. They are having a session on the litigation course in Jaipur. We will be starting back our the regular sessions on the section by section reading. And today we have Mylar from Bangalore. Mylar has been taking sessions on GST again across country, part of indirect taxes faculty group. And thank you, Mylar, for accepting the session. We have three small topics, section 31A, section 32, and section 33. And most of the times we would have read this once in the lifetime. After that, we wouldn't even have touched these sessions. So it's an opportunity back. We look at these sections and critically analyze which areas these needs to be applied or we are missing. And we will have Mylar walk us through the sections. Mylar, over to you. And thank you.
Yeah, thank you. Thank you, Vinu sir. And also thank GST faculty group for providing this opportunity to discuss in respect of section 31A, 32 and 33. Okay, we'll go section by section, and whenever there is a discussion required or any points which are missed, please everyone please free to jump in and add those points so that there will be a value addition for the group. Yeah, section 31A, electronic payment option. So I'll just go to the section, then we will discuss in detail about the section. The government may, on the recommendation of the council, prescribe a class of registered person who shall provide a prescribed mode of electronic payment to the recipient of a supply of goods and services or both by him, and give option to such recipient to make a payment accordingly in such manner and subject to such conditions and restrictions as may be prescribed. So interestingly, there is no rule which is prescribed under section 31A yet. But 31A requires some class of registered person, as may be recommended by a council, to give an option to the recipients to pay, electronically. So this is the provision which talks up to encourage paying digitally. Okay. So if you bifurcate this, there's the government's discretion. Government may recommend, they may not recommend, and it is a mandatory provision. So again, we need to see mandatory. What is the mandatory? Mandatory to provide an option. See, the merchants cannot say, I'll accept only cash. The merchants should mandatorily provide electronic payment mode, but it is a option of the recipient. The recipient, at his option, choose either to pay electronically or to pay by cash or any other mode. But it is a mandatory is only for a merchants to give an option, but for a recipient it is an option. And as we discussed, there is no rule that is notified yet under this section. But interestingly, sixth proviso to the rule 46, okay, requires in respect of B2C customers, excluding export transaction, if it is a B2B transaction and the aggregate turnover in any of the year from 1718, if the aggregate turnover is more than 500 crores, then the QR code has to be provided in the invoice, which enable the recipient of goods or services to make a electronic payment. So what are the mandatory things that should include in the QR code? First, suppliers information like suppliers GSTN and suppliers UPID for the payment. GST breakups, invoice detail, invoice number, invoice date, and total value, and pay is bank account number and IFSC code. So these are the mandatory things that should include in the QR code. Next.
Mylar,
Yes, sir.
why did they use the word dynamic?
Okay. So the QR code can be of static or dynamic. So dynamic, uh, for each invoices, the QR code will get changed.
So this is something which we should definitely advise, because most of the people have like Shopper Stop and other places, there you scan the QR and enter the payment. But of late now we can see people, the moment you scan the QR, exactly that amount and everything is reflecting. Which
Correct.
earlier it was one static thing, you scan, you enter the amount and everything.
True.
I think this is one we should definitely tell wherever they are applying more than 500, that it has to be dynamic and not static.
Yeah. Okay. So there is a dynamic QR code. But sir, shopper stop, this is not required. Payment information is sufficient. I'll just take you to that slide now. See, in majority of the shopper stop or wherever you go, the thing is first they will collect the payment, then they generate an invoice. So there are two things which we need to be taken care here, where the payment is received before generating an invoice, payment is after invoice generation. So there is a slight difference in the QR code that needs to be generated in the invoice. See, when the payment is received before generating in the invoice, then there is no meaning in giving a QR code for a payment option. So when the payment is made by the recipient prior to the generation of invoice, then invoice must clearly mention all the relevant payment particulars such as transaction ID and date of payment. So that is what the requirement in the QR code. Once the payment is done before generating an invoice, then again there is no meaning in giving a QR code for a payment with the payment options. So instead of payment option, if the payment is already done, then give the particulars of payment and transaction ID. That is the sufficient compliance of the sixth proviso to rule 46. Then what actually is required where the payment is not done before generation of invoice? In those cases, if the payment occurs subsequent to the invoice generation, then as Venu sir told, it's a dynamic QR code becomes mandatory on the invoice itself. This code must be scannable for a digital payment processing, facilitating immediate and uh, compliant transactions. So this is the major difference which I wanted to bring, where the payment is done before invoice and payment is done after the invoice. So this can be seen in case of big bazaar shopper stops. Once you go there, first they will scan it before generating invoice. They will collect the payment, then only they will generate the invoice. So for them, only payment particulars to be captured and not the option to make the payment. Okay. So this is what we discussed, option versus compulsion. So compulsion is for a taxable person to give option to the buyer. But for a buyer, it is an option either to make a payment through digital mode or to any other mode. So these are the notifications issued under sixth proviso to rule 46. Okay. Okay. Now, any other discussion? If any other points required, we can discuss in Rule 31, Section 31A, and we will move to Section 32.
Non-compliance of 31A, general penalty 122.
Yeah, 50,000 122. But as of now, there is no rules which is notified, so there is no penalty for 31A. Only for Proviso 6 to Rule 46 only applicable.
Yeah, so in Rule 46, they have given the QR. So isn't it we say that that is sufficient thing for compliance? We have a notification notifying the class of people.
Correct.
So, and Rule 46 says that it has to be there. So isn't it the sufficient thing to say that the section is ineffective?
Yeah, we can.
In my view, yes, and the penalty will be applicable if someone is not complying.
Yeah, true. If the aggregate turnover is more than 500 crores and the QR code is not getting provided in the invoice, then obviously, yeah, the general penalty of 128, 125 is applicable. Sure.
Yeah, so especially now we need to watch for these Netflix or other subscribing service providers who would have definitely crossed 500 crores when they, or maybe internet service providers and other things where people have taken on a subscription plan. So the invoices now should definitely come for a link. Now,
Yes,
instead
yes.
of QR, people are now sending the payment links in WhatsApp, and on the invoice also click here to link. So can we say that that would bring a sufficient compliance?
See, Rule 46 clearly says what are the things that should include in the invoice. If that invoice requires a QR code, then it should be provided. So it may be compliance of 31A where they have provided an alternative method for a payment. But for a content of invoice, I should say the QR code also should come along with the link. Nowadays, even if you see the Netflix, on the TV itself, they are displaying the dynamic QR code where you can scan and make the payment immediately, it is getting activated.
Yeah, but if someone has integrated with, let's say, Razorpay or Zoho Pay, many payment apps have come. They are now generating a dynamic links with same like dynamic QR code, which on a click of it, it will collect the information relating to the payment and everything is taken care. Can that be treated as a sufficient compliance if I have provided the link, which is dynamic, but definitely not the QR?
Yeah, if the information of the link is there on the invoice, that's sufficient. I know that circular which says that is sufficient compliance. But again, I'm looking from the Rule 46 angle. The Rule 46 requires QR code. Then according to me, that QR code should be there. But by and large, the spirit of the law is taking care. I can take the views of Venus and others.
Maybe others, your view. Like as you said, the intent of collecting the digital payment is taken care. Uh, I don't know. So others can have their views.
Isn't there already a relaxation that when you are giving it in a digital display, it is deemed to be having a QR code?
Because the QR per se is a quick response. And I'm just thinking, should the quick response, should it necessarily, I now go back to the IT Act, and should it necessarily, when we say quick response, the scanned image that we see, is that only that permitted, is something that we have to think.
Myler, sir, you have your net with you. If you can take notification 71/2019.
Okay, 71/2020, 71/2020 or
I think it's 2020 or 19. Let me just check.
one second.
2020. Sorry.
Yeah. Is it visible, sir?
Yes. What exactly does it say?
You want me to open a parent notification?
Where is the parent notification?
So it's just extension of time.
That is not the
Yeah,
one
I'll
I'm
just open
looking
the
for.
parent notification. This is the parent notification.
That is the proviso that I'm looking for. Provided that where a registered person makes a dynamic QR code available to listen through a digital display, such a B2C invoice issued containing cross-reference for the payment using the dynamic shall be deemed to be having a QR code. So if Venusa's scenario of having a link in the invoice, but it is available as a QR code at a digital forum or a screen or any other portal, wouldn't this proviso save us?
But when you scan a QR code only, we get a lot of details, invoice number, amount, date, so many things. But on a
Yes.
payment link, it will directly take you to the payment alone. So
No,
I don't
payment
think
links.
one can.
Payment links today also have that information is like towards which purpose, to which vendor you are making the payment. All those informations are available in the payments links that are coming these days.
So this proviso is nothing but my PPT where I showed the payment is done before and payment is done after. So this proviso is related to that.
So we can't use this proviso to say that another forum wherein the data is captured can be a deemed QR code.
Correct. But but again, if you see here, the QR code is mandatory. Either you give option for the payment. If the payment is already done, then give a cross reference for a payment using dynamic QR code. So if you see B2B, B2C invoice issued by such a registered person contain cross reference to the payment using digital quick reference code shall be deemed to have sufficient QR code.
So it cannot save.
I think it cannot save. So this is applicable only where you are done a payment. See how what Venu sir has given suggestion that is holds good. If before generating invoice I have sent a link, he has done the payment, then that payment cross reference I have included in the QR code of the invoice, and then I have generated, then I think it is correct. But if you generate an invoice together with the generation invoice, you have sent a link for a payment, then according to me, it is not a sufficient compliance. That is my reading. If you can correct me.
I have something to add on in this. May I?
Yeah, please.
Sir, nowadays, whenever we are doing an online transaction, or for that matter, even if we are like standing at a offline showroom, what they are doing is absolutely correct. What you have said, that they will, itemize the detail, and they'll share a link and then ask you to make the payment, and then the final invoice will be issued. But sir, most of the time nowadays, what we are getting, the invoice is also on the digital mode, and which has that reference of that payment link as a form of QR code. Even if I'm making a payment through a digital platform or any of the site online available, they will directly take me to the payment link where everything will be captured in that whole scenario, as Venu sir has already said. I think Venu sir has already said that we get all the detail to which vendor I am making the payment, what amount I am making the payment. I mean, everything is available, so it is as good as invoice format only, which I think. Only thing which is missing is I may not have an itemized detail at that payment link. But this is what that proviso is taking us, now.
No,
Whatever, thing we have. So I think even if that link is there, so that will suffice this condition.
Correct, madam. The only one thing I am just highlighting is what is the point in which you have generated that link? Say
No,
scenario
but sir, it
one.
doesn't talk about whether it has to be before the payment or after the payment. It is showing only merely that it is if it is landing to a payment page. So
No.
it is not written anywhere in this proviso whether that
No.
landing to that page has to be before the issuance of an invoice or after the issuance of the invoice.
No, it says where such registered person makes the digital QR code available to the recipient through the digital display. That is one.
Correct.
So
Yes.
there is a digital display of some QR code. You will scan it and pay. Such
No, not
B2C.
necessarily, sir.
No,
When I'm making,
any mode I'll agree, madam. Next,
yeah.
such B2C invoice issued by such registered person contains cross reference of the payment.
Correct.
Using so if that means cross reference of the payment can happen only when the payment is before and invoice is later. that cross-reference of payment using digital, this dynamic QR code shall be
Sir,
deemed
what
to
we
have.
call an invoice? What we call an invoice? I mean,
Maila
what
sir,
is an
can you
invoice?
also please take up circular 146 on your screen?
Yeah, sure.
Sir, I have recently seen in this Nammayatri cab, whenever we are using Nammayatri service, they flash a QR code which will exactly give you the amount that you need to pay, and post that the invoice comes to your email. So I think this proviso is talking about the dynamic QR that generates for the payment, and which is not available later on the invoice as such, because payment is already completed.
Yes, sir.
Sir, I agree that para 5 is mirroring what you are saying, but in the case of para 3, that invoice is already made as reference for the UPI payments. So, does it specifically mean that that invoice can also pre-exist at the time when the UPI mode is being used for linking that payment to that invoice?
So
Para 3, scenario 1.
Sir, without having an invoice or without having a reference of what amount I need to pay, there cannot be a payment. How will I
Precisely.
know what amount of payment I have to make? So that is my question, is what we call an invoice. Invoice is just the totaling up of what I need to pay. Otherwise, how will I make a payment? So issuance of invoices, I mean, in today's electronic scenario, it is not that we are manually writing the invoice and giving it to the client first or the customer first, and then he or she is making the payment. It is like going hand by hand. So invoice automatically is generated whenever I am sharing the payment link. Whether it is like you click that button or you don't click that button, how does it make some difference? The moment I make the payment, it is completed.
So here they use the word using any mode, etc. Payment, debit card, credit card, online banking on the invoice. So the circular seems to recognize that the UPI payments are made towards an invoice. It doesn't specifically say that the invoice is yet to be generated. It seems to indicate that there is already an invoice. So it is not a prepayment scenario.
Agreed, sir. This is my, query is how will we make a prepayment without having an acknowledgement
No,
or
I am
estimation?
with you. I am having your own. I hear the same opinion. I'm just saying that that alternative modes can also serve as a dynamic QR compliance.
Correct. Only I think in cash they have written that in cash without using this dynamic QR code and the supplier provide a cross reference to the amount paid in cash along with the date of such payment on the invoice. So that
on
is
the
linked
invoice.
because
On the invoice.
yes, on the invoice. So there it has to be mentioned. So their cash payment or whatever it is dated. But when I'm making a payment, I think the date is automatically captured. The date, time, everything is captured.
Okay. So, madam, nowadays, see, if you go to the retail showroom also, first they will scan it, then they will arrive at the total payment, they collect the total payment, then they will generate an invoice. That is the custom normally do in the retail business. Uni sir, sorry, I didn't get your point in respect of 3 you was trying to say.
Where does it explicitly fall out that that reference to the digital payment has to precede the generation of the invoice? The circular seems to indicate that the invoice is already existing when the payment is being displayed.
Can you just point out me exactly which line?
Clause 1 of para 3.
This one.
Yeah, second para. In case where the supplier has digitally displayed the dynamic QR and customer pays for the invoice. So it
No.
indicates that the invoice is already there, right?
No. See. No. It is not. It doesn't mean that the invoice is already existing. It is pays for invoice, not pays after invoice. See, towards that invoice. For example, in the retail, you go there, they will scan it. They will total amount is so much. They will inform you. and they will have one digital display of QR code in front of there you scan and pays for that invoice that is going to be generated. And once you scan and make the payment, that is very clear by reading next two lines. Then what they says, in those cases, you give a dynamic QR code on the invoice, making reference to those payments. So if you serial number 1 and 2, if you see, they says this payment reference has to be given on the invoice. If you read like payment for invoice is already existing, then it loses its weightage on invoice. So payment reference can be given on invoice only after the payment, not before the payment. So because of that, I am saying don't read for invoice as after the generation of invoice. You read for invoice for the invoice that is going to be generated after your payment.
So if I go to Lulu hypermarket and I buy goods, the first cashier has to punch in all the goods through the scanner, etc., generate an invoice and ask me to pay through my GPay.
No, sir. No,
Then
sir.
when I pay the GPay, then that transaction is auto captured into their system, and when the invoice gets printed, this data is also getting printed. That
Correct.
is what I am seeing. So it means that the invoice, even to the except for that capturing of the printing of my QR reference, that payment reference, it's already fed in and the number is generated, and only these details are further captured down the line.
No, sir. No. So what you told, everything is right, but only invoice number is not generated because they are not saved or they are not done the processing. So they will keep last final generate button. They will keep it pending. They will see what is the amount. They will ask. They will put it in another digital display which generate a dynamic QR code, and they will show you. You will scan it, and that payment will happen. That payment reference will directly flow to the system. Apart from all other thing, this payment reference also will get added in that screen. Then they will generate. Then only that invoice number will generate. Because you may have 100, there is a parallel, one more person may click that button before you, then that sequence will generate it for that another billing person, then it will get generated. Except generating an invoice number, rest everything I'll agree, because the invoice number will generate only after they click the button.
I see.
So again, if we go with that interpretation, on invoice will loses the value. Payment reference will not come on the invoice if the invoice is already generated. That is, the invoice is ready to generate, but the invoice is not generated yet, according to me. Venu sir, any view? Any others?
No, we can proceed.
Yeah.
Just one thing to add, Maynard, that
Yeah.
I'm going through the process of how anything happens at POS. Process is it's a 4-step process: scanning the items, calculating the total, accepting the payment, and providing a receipt. So what?
Accepting the payment and Deepak, sorry, accepting the payment
providing a receipt.
Receipt or invoice?
Yeah, in the general term, it's a receipt, but it is an invoice.
Okay.
So what you're saying seems that that's the process which is followed. They scan the items, they calculate the total. Once the payment is received, then the invoice is generated.
Yeah, once the payment is received, that reference they will add it in the invoice, and then they will generate the invoice.
Correct. So if we say that they are doing this process, then they are in compliance and they don't have to mention the QR code on the invoice.
Correct.
And sir, in case of cash payment, just cross-reference of payment is required. That's all. No QR code is required there. So it means for
cross-reference of the cash payment in QR code.
That has to be in QR code.
Correct. Yes.
Mailagar coming in, what are you saying? The cash payment reference?
Yeah, in the last here, the point 2 in cash, if the payment is done in cash,
right,
without using dynamic QR code, I have highlighted that the supplier provided cross-reference of the amount paid in cash along with the date of such payment on the invoice.
Yeah, that is
That is
before
required.
payment made, before generating the invoice.
Correct. Correct.
Yeah.
But sir, this again has to be through a QR code only. Yeah, this only QR code for this also. don't
If
think-
that information is provided, that is a sufficient compliance.
So if it is QR code or otherwise also, no?
Otherwise also.
That was my point basically. In case of cash payments, QR code is not required. Only cross reference of payment is required.
But
That,
that cash should have been given before the invoice generation.
of course, that is there because when we pay the cash only, then they generate the invoice.
Correct.
Thank you.
So, sir, what we have concluded is that if we are making an online payment, then the QR code has to be there on the invoice, or it doesn't has to be there.
No, the question comes when you are making the payment.
No, payment is obviously, sir. I'm standing in a store and they just give me the QR code to scan. I just scan that QR code and I make the payment.
Then payment reference is sufficient on the invoice.
Payment reference means how the mode of payment.
Correct.
Okay, so then there is no need
The
to.
supplier
Abhi,
provides
yeah.
reference of the payment along with the mode of payment on the invoice sufficient. So this is
Gauri,
one
side
part.
No, every time when sorry to interfere, every time when we use the QR code to make the payment, automatically a transaction ID is created, right? Is it not the proof of payment reference?
That ID has to be cross-reference of the payment should be given on the invoice, madam. If that, see, whenever the
In many cases, like when you do an online shopping or something, once we use the QR code and make the payment, we are supposed to share the screenshot with the supplier. Only then they identify that is one more process which is there in certain type of transactions.
No. You see, if the vendor is asking a screenshot of the payment, then he is not a vendor who is having a turnover more than 500 crores, madam. If the vendor is having a more than 500 crores turnover, then first he will collect a payment. That is automatically the payment information will go to him in the backend. Then they will give this information and generate an invoice. Those process 100% they will have. If you are talking about a small vendor where they will send you a link, you have to make the payment, then you have to send a screenshot. All these will be very small vendors. They will not have 500 crores of turnover.
Okay, good. Thank you.
Okay, we'll
Yeah, let's proceed.
proceed with us. Yeah. Then section 32 seems to be very small and very not much important section in the act. But if you see, it is very much important in respect of collection of taxes, because entire indirect taxes, we collect the taxes from the customer. Then the question comes, where is the authority? So we'll read section 32 and see what are the important aspects that is coming out, and also we'll try to link to rule 35 and discuss the various clauses in the agreement which sometimes saves us tax liability of up to 7.5 to 10% in some cases. That we'll discuss in a subsequent slide. First, we read section 32. A person who is not a registered person shall not collect in respect of any supply of goods or services or both an amount by way of tax under this act. So what is important is the unregistered person cannot collect an amount in the name of tax. Unregistered person can collect an amount in the name of a consideration, but unregistered person cannot collect any amount in the name of tax. That is important. The next subsection 2, no registered person. First is in respect of not a registered person. Second is in respect of a registered person shall not collect tax except in accordance with provisions of act or rules made thereunder. So unregistered person cannot collect a tax at all. So if it is a registered person, he cannot collect a tax except in accordance with the provisions of the act or the rules made thereunder. So registered person is authorized. Indirectly, we can say there is a statutory backing to a registered person to collect taxes, collect taxes from a customer. Next. Sorry. Okay, so this is what we discussed in the section 32.1 and 2. Now we'll take some key aspects, all these questions framed by Venu sir for today's discussion. 1. Registered person selling goods at MRP, which is inclusive of tax. Nothing specified in an invoice. Sorry, it's an unregistered person.
Correct, unregistered person.
Unregistered person. Unregistered person selling goods at a MRP, which is inclusive of taxes. Nothing is specified in an invoice. So this is for the discussion of the group. Group can put in their views. Then again we'll consolidate and take others' view, and then we'll conclude what should be the course of action and how department can see these transactions.
MRP is including taxes, but when someone is not specifying anything in the name of tax, it would still mean that the value the customer has paid is value for the goods and taxes have still not been collected.
Okay, that is one view. Others' view? Okay, any other views? Deepak Puni sir.
So we'll have to see legal metrology act of the relevant act. Does it say that if it is MRP, does it always have to add inclusive of taxes? Yes, it has to. Where it is a taxable person, then it is inclusive of taxes.
See,
If not,
the rule 16 or 18, it clearly says in each label, the word should be there. Maximum retail price inclusive of all taxes. That word should always be there in all label. Inclusive of taxes, that the word is mandatory as per Legal Metrology Act. Any display, it should say 100 rupees MRP inclusive of all taxes. Because earlier the concept was MRP for 100. The people used to say that taxes extra and they used to collect 100 plus 18. Now the act is very clear. If you write just MRP, it is not sufficient. You have to write MRP inclusive of all taxes, has to be mentioned on the label. Okay, and the other prohibition as per the rule is that no person can collect an amount more than MRP specified on the label.
if an unregistered person sells the same product, which is at the MRP, and he is not collecting taxes for the reason that he is unregistered, then he's increasing his margin on the product and he's actually not collecting any tax.
There is one of the view. There is view.
Can you say that again, Deepak? What did you say?
Same what you said, sir. Same what you said.
Okay.
So he's saying because he's not specifying it is a tax. So he's collecting extra margin and he's not collecting tax. What he's saying.
Does say that the unregistered person is actually unregistered because he is less than 20 lakhs. So he was never a taxable person. And therefore, whatever he supplied, there was never tax crystallized under 9(1). So there is no question of him collecting tax per se. And since he has not specified anything as tax, 76 also does not apply. So there is no question of him collecting any taxes or as taxes just because he's selling at MRP and stating for as inclusive of taxes. And there's a silent if any just because he's complying with legal metrology.
Perfect, perfect. Any other view? I think we have all similar views. Okay. See again, if you read again section 32, the prohibition to unregistered person is collecting an amount in the name of tax. Unless he is not specifying as a tax, then there is no bar on him to sell at MRP. See, MRP includes everything: transportation, landing cost, taxes, if at all. And also it does not bar him from recovering a loss of ITC. Recovering loss of ITC is not equal to collecting output tax. The biggest disadvantage for a unregistered person is a loss of ITC. So you may, somebody says collecting extra amount and is making profit, but what actually is not making any profit because there is a loss of ITC. So if he is purchasing a product at 80 rupees and there is a 15 rupees input tax credit, he is losing that input tax credit, then again his costing will becomes 95 rupees and he is adding his 5 rupees margin and is selling that at a 100 rupees MRP. So that recovery of a loss of ITC is not a collecting tax, is it becomes a part of his cost of purchase. So there is a point number one. If there is no other views, then we can go to second question for discussion. Register person charging 28% while the tariff is 18%. How should the reporting and appropriation to be made in audit report or other documents? So the question is collecting 28%, but actual rate is 18%.
So this is a question of interpretation of or classification issue.
Correct. Genuine classification issue. One, how we will issue an invoice? Obviously, because he is thinking it is 28%, he will be saying 100 rupees plus 28% taxes and he will be issuing an invoice. And at the time of audit by the department, they will say that it is 18% and not 28%. Now, the department, how they will look it, what is the consequences, and how the department should disclose this.
But they can at best issue a show cause notice only for this.
So show cause notice may not come, madam, because 28% he is collected and paid. If is, see, the question will change if the show cause notice can come where he is collected 28 and disclosed 18 and paid 18. Then 10 rupees is 10% is not disclosed at all. Then show cause notice comes under section 76 to collect that 10%.
But audit has not jurisdiction to do under 76. They have to refer to somebody else.
But they can issue a show cause notice, no, sir?
No, audit is only empowered for 73, 74 and 74A, 65(7). So if you are looking at this question from the audit report, they cannot do anything. They'll have to simply refer the matter to the other wings.
Okay, got it. Who has authority under 76, sir?
The territorial jurisdiction only, not audit jurisdiction.
Okay, we can say it as audit has identified and referred this matter to territorial jurisdiction. Now, how they should report it in the audit report? Even in the audit reports, I think Venu sir, correct me. So just sir want to know how they will report in audit report, because if the section says in other audit report and other document, it should be shown separately. If the audit authority feels 18% is correct and the assessee has reported 28% in the invoices, now the audit authority, how they will show in the report? That I think that is the question more than show cause notice. Correct me, Venu sir, if I'm wrong.
Yeah. So even that, even in 9C, so while reporting in your table 9, ideally the taxable value should be reported at 18%, and the extra amount that has been collected, which is the 10%, is like any other amount. So the remittance to the government is 28, 18% is the tax, and the 10% goes as any other amount.
Any other amount collected and paid.
Yeah.
Okay.
Sir, this 10% difference will be paid in cash, not through ITC.
Perfect, sir. Perfect. That is also a matter of problem. If it is discharged to ITC, then that can also be questioned and demanded.
By the way, 49 permits, any other amount can also be paid through ITC. It doesn't restrict only tax to be paid through ITC.
No, output tax only paid now, sir. Any output tax, whether self-assessed are demanded, but you can utilize input tax credit only for the output tax.
I would believe that the tax discharged through ITC would also be valid. The differential 10% which has been paid through input tax credit would also be a valid amount.
But that will not be an output tax now, sir.
Even in the output tax definition, the tax which is chargeable is an output tax.
Yeah, there is no levy here. What you have collected is actually forfeiture.
Chargeable is only 18%, not 28%, no, sir.
Now, keeping aside the issues of the excess 76, etc., my question is, we are looking at the invoice per se. So 31, 32, 31, and 33 read together. We see that there is a self-assessed misclassification, and the officer or the auditor feels that there is a misclassification due. So, keeping aside 76, what is the violation of 32 that you foresee here? Can it be a separate offense apart from 76?
Yeah. Yeah, because 32 says only in accordance with the law, the registered person can collect. In accordance with the law, he can collect only 18%, but he has collected more than 18%. So general penalty of 125 can also be invoked.
Is it 122, 13 or 125? Sorry, 122, 14.
13 will not come. That 3, 4 also will come because he has paid within 3 months.
Oh, he has paid here. Okay,
Yeah,
I forgot that he has paid.
Yeah, yes, in the invoice he has mentioned and done. So there is no intention to defraud anybody, anything. It's a genuine misclassification. So according to me, 122 will not come, but maximum they can invoke 125. That is also subject to 126.
Mailar,
sir.
for the recipient, would the ITC be available at 28% or 18%?
So we had that discussion long back. There are two open school of thoughts. Those who are sticking on to 16 charged, they will say yes. Those who are feeling that it is never taxed, so definitely even enter ITC, they will say no.
Those at least who say yes, and it is an input tax credit which is available 28%, then the discharge of the tax by way of ITC would also be a valid thing. The differential 10% which was paid through ITC would also be a valid thing.
For your 18 to 28, you are more comfortable arguing that. Let us take from exempted to 5. Then test it out. Because once it is exempted, but you are charging 5 and you are discharging through ITC, you are violating section 11 also. Not just 32.
But sir, here I think under ITC it is written tax paid on the invoice, something like that.
The issue is, Sir Suresh sir, that whether it is tax in the first place, that is the fundamental question.
That is only because that's why then that 10% will not be available to be utilized from the input tax credit. That is not the output tax. So that is a basic issue. So if that is the issue, then I think ITC will not be available for the excess 10% because that was never a tax.
That school of thought. Second school of thought.
That is 2 subsection 62, that input tax definition also says.
Kindly.
Yeah. Means the central tax, integrated tax, or any other on. Okay. So it should be a tax first of all. So again, whether Mafatlal case will apply in this case, we need to see if it's a mistake of genuine mistake of law. Then it will take character of tax, and that ITC should be allowed. That we need to see again.
Actually, under central excise, there were many cases by tribunal also, where the assessee was under the impression that it was a taxable item, and they discharged the taxes. And long after litigation battle, when it was decided that that item was not taxable, even then they allowed the ITC on that. There are many judgments in central excise like that. But here I think, but for that, there should be a bona fide belief. That should be a legally debatable point, that tax is 28% or 18%. It is only applicable in those cases.
But there is this doctrine of unjust enrichment, no, sir? That
no, here there is no unjust enrichment, madam, because he is collected and he paid to the government.
No, but when you use your ITC for that, then it tantamount to enrichment in my view.
No, because unjust enrichment comes where I make a profit. Here, I paid 28% to the supplier, and supplier paid this 28% to the government. Okay, I paid 28, I got 28. I am not making extra money out of it.
Sir, kindly read again definition of input tax credit.
Yeah. The input tax credit definition, if you see 2 subsection 62, in relation to the registered person, what do you mean by input tax credit? In relation to the registered person means central tax, state tax, or integrated tax, or union territory tax charged on the supply of goods and services are both made to him and includes.
So, sir, there is the word charged. What he has charged me.
Correct.
But, sir, whether before that charge, the word is tax. So, tax per se has to come from powers of law to exact that tax. So, if something just because you charge doesn't mean it is tax. So, whether there was levy at all for that rate notified at the higher rate from 9-1, no.
Correct. You are absolutely correct, Oni.
So let us assume that I go ahead and say I charge 40% as CGST. So just because I've charged it on the invoice, even though that rate does not exist in any of the notification, that cannot cloth it in the garb of tax.
So that second school of thought, there will be problem to take.
No, that is how the shock cause notices are coming here, wherever there are excess charge. In excise era, there was that circular, paid versus payable, but that they are not accepting.
Under central excise, it was being allowed.
It was being allowed, yes.
Yeah. Okay. Sir, we'll go to point number 3 and 4. That is also a little bit connected to this. Registered person providing exempted goods. Okay. However, classified as a taxable by a registered person. So here the taxes collected can be demanded as under section 676 as any other amount collected, and it can be appropriated. What is already paid can be appropriated. The issue can be demand of ITC under 73, 74 can be a challenging. Next, registered person providing taxable goods, however, classified as a exempt by a taxable person.
This is the main issue.
Yeah, the point number 4, it is taxable, but registered person classified as a exempt.
And here it is that cum tax will be applicable.
Yeah. Correct. So we have a supplied slide to discuss, sir. We discussed that and we'll discuss this rule 35. Now the question comes, what happens in this case where he has declared it as exempt? Now the authorities has finally held that it is taxable. What happened to it? One, he will be demanded output tax on such goods. That is point number one. Point number rule 35 come duty benefit. I'll just keep it for a while for a discussion. We have 2 slides. We will
I
discuss
have
that
till
and then we'll debate.
9:57. Can we try closing fast?
Yeah. Okay. So next 2 things, availment and reversal. So here I'll just put one point. Then again, if time permits, in the next session we'll discuss whether it will make any difference where I have genuinely believed that goods are exempt. In respect of ITC, within the time limit, I have availed the ITC within the time limit of 16.4 and I reversed based on the thinking that it is exempt. That is one point. Another point, I have not, it is exempt because I have not registered at all. What happens? Third point, I have registered, I have not availed the ITC, I have not reversed the ITC. All these 3 things, whether the court will have any leverage, in which case they can say that ITC should be provided, whether all 3 cases or any particular cases was for a discussion.
I will take revenue side and say that you had the opportunity under 60 to do a provisional rate assessment. You had opportunities for filing AR on ITC as well as rate or exemption. None of that you did, even though Act gave you those. Now you failed in your self-assessment and now you are coming to here with begging and for claiming ITC beyond limitation or those which you have availed and reversed and nullified. Since there is no express statutory provision to recredit it back, suffer.
Sir, you are an expert in drafting department.
Here, one point. See, when the ITC is reversed, it's a Rule 42 computation.
Correct.
There was an error in the computation. So when the assessment is being taken for the thing, so that means the error of Rule 42 computation can also be pleaded. I think the ITC can be offset and the net liability is only payable.
Even that error is foreseen in Rule 42. You are expected to do a final Rule 42 calculation and self-assess and recredit in September.
No, that is a monthly. No, that is for the monthly activity. I made
in
an
all
error.
These times, you could have taken your claim of self-assessment and vetted it through a provisional rate assessment of the goods or through an AR. Which avoiding
I am saying that what department is saying is right. It is taxable. I am not disputing it. I have made an error in the computation of Rule 42, which is now subject for rectification. So why is the net tax liability benefit cannot be given? It has to be given, no?
One view of thought, yes.
I am not pleading the ignorance. I'm not pleading I didn't apply 96 or 60. I'm only saying that there was an error. Now the error by number not corrected. Now when the output is being demanded, the ITC correction should also be done. When the Rule 42 was computed basis it's arithmetical. So that should also be set, isn't it?
Yeah. See, if you go with the strict rule, what Uni sir is saying, I'll agree with Uni sir. But if you go to the court where the
I want an explanation how your view or Uni view is right. Because when the assessment is happening, it is assessment of the tax.
Correct.
Sir, assessment is for the outward supplies tax. Credit and all your mechanisms are manner of payments only. So we are only going to assess your output tax.
Credit. Credit has been availed and reversed. I am not fighting that I've taken a mistake in availment.
So that
I am not fighting for it.
You have wrongly reversed the amount. No, we want to take it back. That is your
Which is the provision where you will take back is the question, sir. Which is the provision which enable you to take it back?
But reversal, I think there is some provision. When we reverse and we can take it back,
And one more thing, if you're talking about exempted supplies, technically, even though we say it is availment and reversal in 4B1, if you actually go to T1, T2, T3, C1, C2, exempted exclusive are never supposed to be credited in the credit ledger at all, as per the design of Rule 42. So you cannot say that you actually credited and reversed. The rule designs exclusively applicable credits pertaining to exempted supplies never to be credited in the first place.
But Unisar, these days, what 2B is coming, we are taking it grass on the 2B and the.
No, that is reporting. I am going by rule.
That is reporting.
Myler sir, you have Rule 42 with you. Let us test Venu sir's assumption
No, we
and
just
see whether
crossed
that can be a
10.
defense.
Sir, we just crossed 10. I don't know whether we can continue.
I think it should continue next week, sir.
Yeah, Myler, we'll just close this point and we'll continue next week. The only one section left. Yeah.
Thank you.
Is this visible, right? Rule 42?
Yes.
Which point, Tony sir? Which point you want to?
Now let us go to that flow. How do you arrive at that value that you are denoting in 42?
C2. You want to flow of C2?
Yeah.
Yeah. C2 is nothing but T minus T1, T2, T3. Total amount involved on inputs and input service in a tax period denote T. T is the total ITC. That we need to minus T1, which is related to other than business. Our things comes in T2. The amount of input tax out of T attributable to input and input service intended to be used exclusive for affecting exempt supply. So T2 will get excluded from T.
Yeah, so T2 is totally supposed to be excluded by me and was never contemplated to be forming part of my credit mechanism at all.
I think you have to read it with I also, sir. Amount of ITC attributable towards extensive did not, even this will have an impact. Sorry. I.
So in your self-assessment, when you are self-assessing your outward as exempted supply, automatically the consequences that you ought to have considered that along with this and was never supposed to take part in that credit. Now you are saying it is a clerical error. So that you are contradicting your self-assessment.
So not contradicting my self-assessment. There is a change in self-assessment. See, I had a bona fide belief that exempt. So accordingly, I have done as per exempt turnover. Now it is getting reclassified as a taxable. The one more question is when you say taxable, then you have to see as a whole, not only on an output tax angle.
The problem I see is the original design of the rules in clause E. If you go to it, the word used is the amount of input tax credit credited to the electronic credit ledger of a registered person be denoted as C1, which is to be excluding T1, T2, and T3. So technically, even the first credit as per rules to the credit ledger has never contemplated what you are technically reversing in 4B1. So something that was never entering the credit ledger as per rules, how do you say you have availed and reversed?
Only, sir, for that matter, even the current existing practice, what we are doing with respect to filing of 3B will also be questioned itself, because the question of reclaim, which is otherwise occurring, will also not be able to pass through the test of reflection in the credit ledger, what you are rightly mentioning with respect to the disclosure by virtue of 42(1)(e).
So other than that specific mode that is contemplated through Circular 170 and the change in the design forms and what we do in 37 and 37A, is there any mechanism that allows us to take this ground to get those credits back that the defense Venu sir was talking about? Do we have any statutory hooks within the rules where we can use it?
To that, I have only one point which is coming to my mind. Once we are saying that as a part of self-assessment, I have determined my product to be an exempt, pursuant to which, by way of a disclosure, I have claimed the credit, I have reversed the credit. Now, at subsequent point in time, the department pitching into the picture and stating that the product ought to have been at certain rate of tax instead of a zero rate, which is by way of an exempt supply. At that point in time, can we really take a plea that ITC being a statutory right and not a constitutional right, and once the time period is over with respect to reclaim of the credit by virtue of a period of 30th of June, can we still request the courts to grant the benefit vis-a-vis the output liability?
So Formica India, basically.
Correct. So that's again a thought process, because Venu sir, like logically we are saying if there is a liability, the department ought to have given us the benefit of the ITC as well. But once the annual calculation mechanism date is triggering and we are not reclaiming that credit, because I had a genuine belief that the product continues to be an exempt supply, by virtue of it, I have not actually triggered my annual calculation of reclaiming the input tax credit. So at later point in time, if my zero rate, the exempt supply converts into a taxable supply, am I parallelly will I be entitled to claim the benefit of the input tax credit also? That's a larger picture, what I feel, what Venu sir wants to discuss at this forum.
Correct. If
No, it's not as simple as earlier defenses that we can take now, especially since let us assume that there were n number of IGST purchases that I've made and I've claimed and reversed in 4B1, the state who's consuming it already accrued that revenue. Now, if all your exempted supplies that you made to other states were actually taxable and you are paying it off, and you are now asking for the reclaim of this IGST, the consumption state is going to heavily go against you and say that we will not allow it.
So as a taxpayer, I will always want to minimize my cash flow, and that I would be trying to explore the possibilities to claim the credit which was otherwise missed technically.
Mylar, we'll
Now, if you
discuss
go to
it in
courts,
the group.
one more
I
thing,
think we
if
will
you
have
go to
different
courts,
views.
would court ask, did you have a mechanism to test whether you are eligible for ITC in the first place? Yes, you had. So if you did not opt for that route, and now when you made a mistake and you are coming to us, can a court give equitable relief?
No clue.
But it is all subjective. Some courts may take linear view and they give. See, ultimately, out of these three buckets which I discussed earlier, one, unregistered, according to me, the department will not give, even courts will not give, because 16 is very clear, the ITC is available only for registered person. So that is one. If the supplier is unregistered, department, courts will not give the ITC. Second, supplier is registered and ITC is never availed, then department will not give ITC. The court is also very doubtful. The court is also will not give the ITC. The third most important is where registered, ITC availed and reversed. The department will not give the ITC because there is no express statutory provision to re-avail. But court, based on the equity, they may consider and provide some relief to the applicant, is my view. So it is always better to avail and reverse if it is registered.
Yeah. Can we conclude for the day?
One more question. If I don't avail and reverse, but I keep on availing, and every time I make a payment in DRC03, and assuming it is already paid, can I ask that to the extent of payment through DRC03, only the balance needs to be paid in cash right now?
Yeah, that is also a good idea, I guess. Very good idea, I guess. Excellent, sir.
Thank you, Myla. Unni, concluding remarks.
Yeah, so we are back to SMS on full flow again. We are back to section analysis. We've been analyzing the various provisions of the GSTAT for the past couple of weeks. So we have to move on with our day-to-day reading of the provisions again. So again, we are looking at very minute aspects of certain provisions which we don't generally take up every day. So 31A, 32 and 33 are extremely important provisions, and we had gone into the nuance of the same today. And I congratulate Myler sir for coming up with very advanced level issues in a short frame of time. And we expect more participation from you in the near future. So thank you for the wonderful session, and thank you all the members for participating and making it as so the more enriching. And again, as closing note, I would request everybody to select a session and inform any four of us so that we can schedule your own views on the various sections that are coming up, and we'll have enriching experiences in SMS once again. Thank you all and have a good day.
Yeah, thank you. Thank you, sir. Thank you for providing the opportunity. When I took up, I thought what to discuss 1 hour of these small sections. Once we start discussing, we could not even complete 3 sections. That is the knowledge level of this group. That is the value addition this group is making for us. So thank you, one and everyone for this contribution.
Thank you and good day.
Thank you.